Hi guys, good evening all. So today we'll look into how to build your own mechanical system in Forex markets. So we'll start with trading view. Yeah, guys, can just anyone confirm market? What are the types basically? So basically, if you have a look into the market, we have two types of trading. One is discretionary method, second one is mechanical method. So over here we'll look into how to build our system using mechanical method. How to build your own mechanical system in the Forex market. So as we discussed, we have two types of trading. First one is going to be discretionary trading. Okay, so and second one is going to be mechanical trading. So what is the difference between discretionary and mechanical trading? Yeah, so if you come into the discretion methods, over here lot of human intervention needed. Over here we need to think, so there is no proper rule based thing. But coming into the mechanical trading, the trading which we are going to the way we are going to approach the market is completely going to be a mechanical method. So for example, let's say if in description trading, so we'll use some patterns. Let's say there is a pattern is forming. So over here, if market is moving like this, we used to use a trend line pattern, right? So if market break this pattern, okay, so we used to enter here and our stop loss is going to be, we'll keep above this level and we'll target for the lower price. So over here, is there anything, if you feel it's a rule based? No, right? So over here we are just following some patterns which is repeatedly happening in the market. But over here also some people have some queries, like some people have some anticipation whether market can retest and it will fall, or it can directly after the trend line breakout it will directly fall to the lower prices. But it's not. So every time if you are looking, but see, while looking into trend lines also, when we are trying to plot trend lines, so according to people it differs. So over here, let's say if you are trading a trend line, for some people it will look like this, but for some other people the trend line will be like this. For some other people the trend line will be like this. So there is no framework over here, there is no fixed thing over here. So it from people to people it changes. Basically from people to people it changes. So over here, to avoid these things, over here lot of emotions involved over here. So basically trading is completely human emotions only. But over here if you have a look, so people to people it varies a lot. People it varies a lot. So over here, coming into the mechanical system, so basically what is mechanical system? Any idea what is mechanical system? Any idea guys what is mechanical system? No. So basically mechanical system in the sense it's a rule based trading, which mean, for an example, let's take, so for example we'll take a candle. Okay, so let's say we choose 6 o'clock candle. Okay, so 6 o'clock the criteria. So over here in the mechanical system we used to follow steps. the framework, the step 1. What is step 1? What we need to do? What is step 2? What we need to do? What is step 3? What we need to do? So over here there are some fixed steps or fixed parameters. Only we need to follow those fixed parameters. So over here, let's say if you have a look, we'll choose 6 o'clock candle. Okay, we'll choose 6 a.m. candle. So daily what I'll do, I'll choose a 6 a.m. candle. My first step in market is to choose 6 a.m. candle. So my first is choose the 6 a.m. candle in the market. Second, so what is my second step? Let's create a rule. So this is what we need to do. Okay, if we want to create ourselves a method, first we need to learn some things. Let's say if you have learned a number of methods, with that methods we need to make it as a simple parameters, and with those methods we need to clearly frame the framework. Okay, so first step is choose the 6 a.m. candle. Second framework. So in our rule, so we need to do second. So what we can do? So basically market will work on liquidity. So if we are choosing the mechanical model to based upon the liquidity. So over here 6 a.m. candle, you can see evening 6 or morning 6. So the time which is where peak highs are there. So to keep an assumption, in 6 a.m. there will be a New York session opening, or let's keep it as, okay, let's keep it as evening 7 p.m. As of now it's 8 p.m. So we'll keep it as 8 p.m. Instead of 6 a.m. we'll keep it as 8 p.m. candle. Okay, let's say if I'm trading in Nasdaq, I want to create my own mechanical model. So let's choose a 8 p.m. candle. So my first framework over here is I need to wait for the candle which is forming at 8 p.m. Second one, what is the time frame? What is the time frame? We'll choose 8 p.m. candle, 15-minute time frame. Second step is like 15-minute 8 p.m. candle. We need to choose 15-minute 8 p.m. candle. So what is the third framework? We need to mark the highs and lows. We need to mark. Let's do a framework. So here we are looking for liquidity. Okay, let's mark the high and low of the candle. Just a second, guys. Candle. Here most of the framework done. We have chosen 3 steps. First step, our first job is to find the 15-minute 8 p.m. candle, which means why we are choosing this, we need to have some logics behind this. So why we are choosing it, that's the New York session open. New York open. So we are choosing the 8 p.m. 15-minute candle. Next step, next framework, we need to mark the highs and lows. We need to mark the highs and lows. So let's say if high is broken, okay, if high gets swept, the fourth step, we are looking for the fourth framework. Okay, in the market, if the high is getting swept, so over here, if high sweeps, we look for sell opportunities. If high sweep, if high of the candle sweep, look for sell opportunity. Next, if low sweep, low of the candle sweeps, look for buy. So here what we done, we have, instead of looking into a simple pattern, we have made a framework. So here only this we are going to follow over here. We are not going to do anything discretionary in the sense, if you look for a trend line, so let's look for some other patterns. Let's say if it is a head and shoulder pattern, okay, So this is the left shoulder, this is the head, and this is going to be the right shoulder. So once this market breaks, we're going to enter here. Okay, for some people they'll mark here, for some people they'll mark here, or for some people they'll create a trend line like this. So over here there is no fixed entry over here, there is no fixed entry, which means over here the entries are different people from one guy to another guy, it varies. See, win rate of the strategy, all we need to back test. So for that, first we need to fix with our model. Okay, first we need to fix our framework. We need to first create a framework, first validate the framework, what is the reason, what is the logic behind this framework, why we are creating this framework. Then we need to back test it. So we'll do back test also. Okay, so over here this is the entry. So once this all steps done, okay, in the fifth step we are going to enter some entry criteria. So these are all the higher time frame framework. So first one, we need to choose 8 p.m. 15-minute candle, mark the highs and lows of the candle. If the high sweeps, we need to look for sell. If the low sweep, we need to look for a buy. So not only this model, we can create a number of mechanical model with the things which we have learned. Okay, so over here, okay, as simple for entry, we will use some things which is called market structure shift. So what is a market structure shift? Any idea, guys, what is market structure shift? Yes, Karthik. What is market structure shift? Any idea? Buyers and sellers momentum. Cool. A sharp V-shaped recovery. Yeah, exactly. So let's say if we are connecting, let's say if we are using some lower time frame framework to confirm our model. So market structure shift, why in the sense? So here we are considering the highs and lows of the candle as our liquidity area. Here overall highs and lows of the candle is going to be our liquidity. So once the market sweep the candle high, so over here let's keep it here. So I'm going to mark the candle high. For example, this is a 15-minute candle high. So I'm marking high. First framework is mark the highs and low of 15-minute candle, 8 p.m. 15-minute candle. Next one, to the next candle, market can open here. Okay, either it can go high and take the liquidity and it can start moving to the lower price, or second probability is we can anticipate market can take the lows and it can start moving to the higher price. So over here, whether market getting reversed or not, whether we need to confirm our reversals. Alright, so whether it is confirmed or not. To confirm that, we need to shift to minute if we are using this 15-minute time frame. Okay, so for confirmations, we need to look into 1 minute time frame. For 15 minute, 1 minute is the lower time frame. Okay, so in 1 minute, we need a market structure shift. Market structure shift is simple. Okay, let's say if market is moving in a manner. So let's say if market is moving, okay, at a certain level, market will, instead of creating this higher highs, market will break this low, and after that certain time it will start moving in the lower side. So over here, if a market is closing below this level, okay, so this is going to be our key level area. Key level area is nothing but our liquidity area. Okay, key level is nothing but our liquidity area. So over here we are keeping this high of the candle as the key level, which is liquidity. So if to confirm that whether liquidity has been took or not, so it's a reversal or not, or it's going to be a continuation. So if it is a reversal, okay, as we discussed, we need a lower time frame confirmation. It's going to be a market structure shift. So here market is coming to the higher price. So once if market shifted, we can enter here. Okay, so once if this market is closing below this latest pullback, okay, we can confirm whether the market has changed its structure. So here we can enter. Here is going to be our entry. Okay, and above this is going to be our stop loss, and below this we can aim for lows as the target. So same like this, we'll make some other framework also. So over here, okay, we'll look into, instead of 15-minute, so this model, we will look into some other models with the same framework which we have created for 15-minute. Okay, we can check into other model. So how? We'll create one more model today. Okay, so with these same things, we'll create another model. So here, so this is how we need to frame a framework. Okay, so now this is for an example. Now we'll look into a clear setup, okay, which I'm using. Okay, so yeah, I have seen some, so stream is buffering and your webcam is also breaking. Okay, just a second guys, let me check. Yes, cool. Okay guys, so here we'll create a system. Okay, so what are the major levels of liquidity? What are the major levels of liquidity? So based on the liquidity, we'll create one model today. We'll create a mechanical system today. So what are the important levels of liquidity? Important levels of liquidity in the market. Yeah, we have basically weekly highs and weekly lows. Have liquidity areas. Why? In the sense, weekly we are coming up with higher time frames, then daily highs and lows, day high and lows. Daily highs and lows are the another liquidity levels. Next, coming to lower time frame, session highs and lows. So we have 24 hours market. So out of this, we have three sessions basically: Asian, London, and New York. So here, session highs and lows also plays a important key level in the liquidity area. So over here, I am going to choose the liquidity of daily time frame. Liquidity which is having in our daily time frame. So first, I need to choose. So we are making our framework over here. Okay, our first step is going to be choose daily time frame. Choose daily time frame. Second step is what we are going to do. Mark the highs and lows of the levels. Mark the highs and lows of the previous daily candle. Mark high and low of the previous day candle. Okay, next. So once we did this, so our first step is to mark the highs and lows of the previous day candle. Okay, once if market sweeps previous day high, we look for sell. Look for sell opportunity. If market sweeps, if sweep happen in the previous day low, look for buy. Look for buy. So whenever a liquidity is sweeping in the lower side, Okay, whenever a liquidity sweeps in lower side, we look for market to yeah. So you have other strategy instead of those three was taught us in the class. I'm using a maximum number of strategy. Yeah, so this strategy over here was over here. We are looking for the day highs and lows. Okay, we'll look into, so our first step is framework is choose daily candle time frame. Okay, mark the highs and lows of the previous day candle. If high gets sweep, we look for a sell. If low gets sweep, we look for a buy. So over here in Euro USD, these are the framework. So here clearly we have made our framework. There is no nothing discretionary. We are not going to do anything, any highs or lows. We are just need to clean and clear. We need to mark the previous day high and previous day low. If the high is getting swept, we'll shift to lower time frame. So for daily time frame, we'll use 5-minute time frame or 3-minute time frame. Okay, to get a entry. So over here, I'm going to use, this is the framework in higher time frame. So we need to look for lower time frame confirmations. So in lower time frame confirmations, I'm going to add okay. I'm going to add lower time frame confirmations. I'm in 3-minute. Okay, look for displacement MSS. Displacement MSS. So over here, so this is my confirmation. Once I get this displacement MSS, I'll go for an entry at my, after displacement MSS, we'll go for an entry. Okay, stop loss above the high. So here overall we have made a framework. So apart from this, we are not going to think anything. So all these things are the parameters which we can easily plot. If I'm giving this instruction to anyone can follow this method. So this is the mechanical one. So instead of, let's say, if you're telling trend line, I can teach you trend lines also. So let's say if I'm marking this as a trend line. Okay, so for some people they look like this is their trend line. For some other people they'll think like, okay, trend line. So there is no discretionary over, there is no mechanical over here. So from person to person it varies. From person to person it varies. So over here we are with this framework, anybody can mark the things, anybody can look into the parameters. So instead of, that's why we are majorly looking into framework, which is mechanical model. Okay, so here we have made a framework which is in the daily time frame. So we'll start with daily time frame. Okay, so first step is look for daily time frame, right? So we'll have some examples. Okay, here what is our first step? Mark the previous candle highs and lows of the previous day. So here I'm going to look into this candle. Okay, let's say yesterday only we can see. So I'll give you some perfect example first, then we'll look into the other examples. So over here I'm going to take this 27th November candle. Okay, this is the high of the candle. Okay, and this is going to be the low of the candle. Okay, so first step done. So now we need to shift to 3-minute time frame. So our first step is mark the highs and lows. Yeah, what is displacement MSS? So simple, displacement MSS is, let's say if market is, we have some key levels over here. Okay, we have some key levels, either it can be a liquidity or a FEG or anything. So let's say in lower time frame, if market is moving into the key level like this. Okay, once market have reached this key level, we need to look for a sudden reversal, which means if the key level is respecting. Okay, so let's say if market is moving like this, if the key level is respected, we need to have a sharp reversal from that level. So here we'll mark the previous last pullback. If market is closing below this, that is going to be our displacement MSS. Displacement MSS is nothing but a sharp A shape or a V shape reversal. If it is in the low side, it is going to be the V shape reversals. Okay, yeah.